Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is February 12th, 2018, and tonight's focus markets is going to be on cotton, the ETF being BAL. We got this short-term trend to the downside, intermediate and long-term still pointed higher. Got a mixed bag here. We've got two positives for the market. One, we have the technical rating, which is still positive, and we have the seasonal tendencies, especially over the next month and a half, and then even all the way out to early May, you'll see is got a bullish bias here. That's getting ahead of ourselves. You're just going to see a lot of volatility, and that's really what we're focused on with this particular deep dive. So the other thing I'm going to point out here is that today we had a stretch low and a pulse low, which gives indication that the trend that I was mentioning to the downside is probably coming to the tail end, and it's a little long-winded, and we would expect that market to sort of subside a little bit. Now, I keep mentioning about this volatility and this explosive move that we're going to be looking at, and a lot of that is coming from the support and resistance levels and the 50-day moving average and a little bit of Fibonacci, that the market is kind of pancaked between support levels and resistance levels, and that pancaking is really going to allow the market to gather some strength, and we would expect some volatility, especially when you start looking at the seasonal tendencies in around this time. So let's at least point out what we're talking about here. These lows over here kind of correspond to this support level that we had back here, which are at 75.41. Very strong 50 support level. The other thing I'll point out is that this yellow line represents the 50-day moving average, and the highs as of late have been touching that and then reversing back a little bit, but they have not been able to really penetrate that level there. If we look further at some of the other charts, here example is a weekly chart. Right through here, these are obviously weekly bars here. We get a 39 here on the support and resistance levels, and when you come across, it's going to basically correspond with the 50-day moving average. It's a little bit higher, but it's at 78, while the moving average was at 75 and a half-ish. And nonetheless, we do have major support to the market. The final thing that I'll show, at least related to some Fibonacci numbers, is that some of the projections that we've had, it's come right back down to a fib level, and it's the lows have been sitting specifically right on that fib level. So between Fibonacci, which I don't talk about all that frequently, I'm not going to go into a lot of detail, but between the Fibonacci, the weekly support and resistance, the daily support and resistance, and then obviously the way that we've been corresponding with the 50-day moving average, the market is pancaked between those levels. And what I'm going to be expecting is, maybe not today or tomorrow, but I'm expecting in the near term some explosive moves, and I want to at least prepare you as to how we're trading it. So I mentioned that we had a stretch low that occurred today, and that was based upon this sell-off that we actually had here, and there's been a nice move here, something that's been quite profitable for us, where the market has been selling off for quite some time. We flip back to the website. I'll just let you know, full disclosure, that the systems are short with a 120-minute bar system, and there is that trend-based system, that trading style. And what we'll be expecting is that system, depending upon whether the market sells off, will continue, or if it does an about face like the stretch and some of the support lines are suggesting, and you'll see in the second with the seasonals are suggesting that this will quickly reverse. So watch the systems carefully. I do expect some type of an exit or even an addition to the shorts, just depending upon which way it actually does break. I'll point out here on the seasonal tendencies. Yesterday I talked about coffee on the Sunday deep dive. Tonight, obviously, with cotton here, it also, similar to coffee, was or is in a seasonally strong period. Now, the difference here is with cotton that if you take a look at the 10-year charts, that you'll see that it has been, it will be strong here after this little consolidation, and we're going to see some type of a peak here, theoretically, in early March or so. And along the way, until we get into May, you'll see that there's going to be a fair amount of volatility associated with that. If we look at the 5-year charts, a little bit different story. It's still the same volatility, but we really see the surge coming into May as opposed to the strength that we saw into the end of or into March. So, however you slice and dice it, I still think that there's going to be a lot of excess volatility, whether you're looking at the 5-year charts or the 10-year charts. I'll pull up the 5, 10, and 15 charts, and what you'll see is that same volatility with the thrust into the beginning of March, and then with the a continuation after some type of a sell-off, with another continuation into the early part of May, and then there's a whole other trend that comes after that. But I do expect increased volatility based just on the seasonal charts. But obviously, when I spend quite a bit of time talking about some of these different charts here when it comes to the support and resistance levels, these being the weekly charts, and then obviously looking at some of these daily charts here, that there is a tremendous amount of high support levels or resistance levels and low support levels, and until the market gets past and makes a thrust one way or the other, we're not going to know exactly what's going to take place. The systems as of right now are still betting on the short side, but that's why I point out the this pattern here, that this pro alert, this stretch, that's telling a slightly different story. So between us, I think that the systems will unwind themselves here, and then we'll be looking for the potential for another long position. But until the systems give us the signals, we're just going to stick with the shorts and see how things kind of play out. But for those of you that are trading, watch carefully, because once we get a little bit further into this pancaking between the support and resistance levels, once that goes on a little bit further, it just simply means that whatever move is going to come will be much more explosive, which means you have to react very quickly. So from that standpoint, just beware of what's taking place, watch the systems very carefully, and then just watch the deep dive, which I update in the morning. But it doesn't become official until the afternoon. So you really only need to look at this once per day. But do look at the deep dive. If I do it in the morning, it'll give you an idea as to whether or not certain things are going to start to take place. And what you're going to want to see is more of a continuation of the reversals that I'm hoping are going to take place, unwinding the shorts and being able to establish some new long positions. But as always, watch the systems, because they have the final say. So hopefully this makes sense, and we'll look at another market tomorrow. Thanks very much.